Retail economist. Good afternoon to you and welcome.
Yes, Tendai. Thank you very much for having me.
All right. Just when we thought things were looking bad, it looks like now the stocks are really bouncing back, and of course there's a positive comeback. What is your view? Because I can actually substantiate it by saying that we had a petrol price increase, 2 of them at the beginning of the year.
Yes.
The interest rate hiked as well.
Yes. So you talk about the petrol price increase having had 2, and I mean we might see another increase coming through in March because there's currently an under recovery, but we'll have to see how that works out. Interest rate increased. You remember that markets were very volatile at the time of the interest rate increase, and the reason that the Reserve Bank gave for the interest rate increase was clearly to support the rand, and as you mentioned, the stocks are rallying. The rand is sustained below levels of 11 rand to the dollar. This might indicate that foreigners are perhaps coming back into the market. We've also seen some normalization in major markets filtering through to us. But most importantly, I think just looking at the domestic economy now and going forward, I think the interest rate decision has been factored into the market. The fact that people are expecting the Reserve Bank to increase rates going further should the rand not stabilize seems to be quite muted for now, because you have seen the stocks like banking and the financial index catching up after some recent softness. Importantly, last week we saw retail numbers coming out and surprising on the upside. Those are some of the stocks that took a hard knock after interest rate increase, because those who buy on credit presumably are not going to afford to do that now. But I think if you look at the sales numbers that came out, I think some stocks rallied after that, particularly in the retail sector.
Mm-hmm. So we started the year with a prediction that there won't be interest rate hike. Yes, there was over-enthusiasm from many analysts, but yes, it looks like another one is coming.
Well, look, what the Reserve Bank did is actually try to influence our expectations going forward, because if you look at where we were last year, where we had inflation tending towards the upper band of the target, the rand depreciated. In the second half of last year, the Reserve Bank didn't do anything. Clearly, what they said in their statement gave the impression that they have factored a sustained depreciation of the rand for a long period of time. There is no other reason. You can't look at inflation as a reason for interest rate increases. So that is why the market is anticipating that the Reserve Bank might have to increase interest rates further to support the rand. If you compare us to the other emerging markets, Turkey for instance, the 50 basis point is clearly not enough. A once-off increase is clearly not enough. But remember, the bank has to balance any increase in interest rate with potentially what is that going to do the economy. Now, for the economy, an increase of 50 basis points doesn't do that much to actually discourage spending. But the sentiment it sends, as you correctly point out, is that this might be the beginning of a tightening cycle. Mm-hmm. So the Reserve Bank has already started influencing our expectations towards that, and we do expect that there might be 1 or 2 coming in 2014.
Okay, just very briefly before you go, I'm really concerned about the unrelenting strike in the yes, platinum sector.
Yes.
And of course, does it put things on the downside in as far as business confidence is concerned and other prospects in as far as stocks are concerned? Well,
I think while the news of the strike seems to have taken a bit of a backseat in the current news, it's still having a huge impact in South Africa. The point I think that concerns me is that if these demands are acceded to, is this going to be sustainable for the platinum mining sector to start with? What message does it send to investors? What impact is this going to have on the mining sector as a whole? I think it was quite interesting to note what the Secretary General of the African National Congress said after the State of the Union address, that when you are in a union, in the leadership of a union, you need to think that what you do impacts the rest of the economy, because if the economy cannot sustain those kind of demand and the ripple effect towards the economy are not good to the economy, you might find that your own industry is not going to survive. So I think that is what we need to be concerned about, is that what impact is this going to have on the overall economy? It does not have an impact not only on the mining sector, it's got a knock-on effect on manufacturing as well, because the manufacturing sector supplies a lot of what the mining sector is. We've been talking a lot about businesses not investing. Now, the mining sector in the previous years was one of the biggest investors.
Okay, Tendai, I'm gonna have to come in there.
Yes.
We have very little time, but thank you very much for your insightful thought regarding the subject. There is some analysis by Tendai Matshimuli, who is a Liberty Retail economist. Wish we had more time to analyze the subject, but anyway, we'll keep tabs on this story as it develops.